So I guess we're up, guys. Everybody hear me? Slight delay. I blame it on the moderator not reading his cues from off stage. So apologies off the top, but thank you everybody for being here. I'm Kevin Carmichael, national business columnist at the Financial Post and editor of the FP's new economics newsletter, FP Economy, which I think is maybe our boss's attempt to keep us creatives from rushing off to Substack and all these other newsletter portals that are popping up all over the place. But we're 4 weeks into that project. There's a few others, and we're pretty proud of it so far. So I encourage anybody who's interested in those of us out there trying to curate a very noisy news environment to check those out if you're interested. I'm going to turn it over to my two guests to introduce themselves. Dan, why don't you go first? Introduce yourself. Tell us what you're doing here, what you want to talk about today.
Sure. Thanks, Kevin. Yeah, my name is Dan Dickinson. I'm the CIO at Equitable Bank, which between that or EQ Bank, hopefully most of the attendees have heard of at this point. I've been there for about 7 years and joined to launch what is now called EQ Bank, but now run all technology operations for Equitable. And have been very involved, certainly in the payments modernization space. I was on the board of Payments Canada for a few years, was on the member advisory committee until recently, and still very involved in what is looking to be the pointy end of how this stuff all gets to work. So very excited about that.
Great. And Nick, tell us who you are.
Sure. Thanks, Kevin. Glad to join Dan and Wise's partner, EQ Bank, here at the Payments Canada Summit. So I've been at Wise 2.5 years. I lead our policy, campaigns, and regulatory strategy in the Americas. My background, I was on the Senate Banking Committee in the U.S. For half a decade, worked in the Senate for a long time. Started my career in journalism, actually. And so always impressed by everything that's happening in this space, including the profile you've built, Kevin. So Wise, just to give an introduction, because I never quite know how well known we are. We're a global payments technology company, and we're building the best way to move money around the world. And we're commonly used by people and businesses who travel, live, and work internationally. We have 10 million customers who move $6 billion abroad every month, saving themselves $1.5 billion compared to typical bank fees. We were founded in London a decade ago with the original send money product from one country or currency to another. We also have a multi-currency account. You can hold up to 56 currencies at one time. And we have local account details, and that includes in Canada. So people and businesses can get paid like a local and also pay like a local with direct debit. I know we do have a debit card. It's not yet launched in Canada. Hopefully we'll soon. That's the consumer-facing side, but we also have Wise Business and Wise Platform. We have more than 300,000 businesses who use us to pay for international payroll, sending and receiving payment for goods and services. And then our Wise Platform includes API integrations with banks like EQ Bank, where you'll be in their app, you'll click on Send Money Internationally, and you'll see Powered by Wise, same customer experience, but integrated directly within that platform. And so, again, really excited to be here and look forward to the conversation.
Thanks for the plug, Nick. That was good.
Yeah, hey, you Wise in the process. That's right.
And wisely got out of journalism as well, given the state of our business. And it was TransferWise, right? I'm just going to ask you quickly, Nick. Why the name change? I want to do that just to root people who might have been familiar with TransferWise and then wondering, well, who's Wise? Are they the same thing? They are the same thing. Why the name change?
Yeah, we rebranded earlier this year, and it's a recognition that our business has changed a little bit. We're more than just transfers. We're enabling people and businesses to use and spend money internationally. And that's a key difference, not just transfers. It's more broad. It's about the international infrastructure we've built around the world.
Got it. All right. Well, look, we're here to talk about the sort of where payments is at in Canada, where it's headed. But it seems like we should probably begin by just going, discussing just a little bit the backdrop. I mean, we're living through this historic moment that's blown up everybody's business strategy, I'm sure. Sure the audience would like to get just a sense from each of you of what that's meant for each of your companies and where you think we're headed given where we're at in the pandemic. Dan, why don't you go first? What's it been like from your vantage point, and what do you guys see over the horizon?
Yeah, I mean, for us, so just a little bit more background. Since Nick did such a good job of describing Wise, I feel like I should have stretched before this session. I think I've got to get a little more detail in here in my questions and my responses. So, a little bit more about Equitable and EQ. So I joined Equitable about 7 years ago, as I said, to launch what we now call EQ Bank. So it's a purely digital bank, no branches, everything's online or mobile. And so when the pandemic started, we saw, I think, what a lot of other banks have seen, and a lot of other companies in general, which is this shift toward doing things online. So, I think more and more people started to realize I don't necessarily need to go to a branch to do the things I've been doing. And so we were already experiencing pretty good growth. We built to pretty close to the 5 billion in deposits mark up to that point, just 5 years after launching, and very quickly started growing even more rapidly. Saw 10x normal signups kind of near the early part of the pandemic. So and there's real reasons and needs for that, right? I mean, people still needed to do banking, but weren't necessarily going to a physical location to do it, which made sense to us. We got into this business because we believed in that. Unfortunately, along with all the the things that came with that, I mean, obviously the pandemic, a horrible reason for this to have happened. But it generated sort of a new need among a segment of people that we weren't expecting to see. So luckily, we had ported our infrastructure for EQ Bank from a more traditional, data center-based setup to the public cloud about 6 months before, and felt pretty smart after that, because the way in which we scaled, starting March, April last year, I would have either broken multiple times over or had to pay an awful lot of money to keep the infrastructure up. So going to Azure actually helped us it just carried on, which is great. So look smart in front of management and the board, which is always what you want as the CIO. But that's what we've seen is a real demand growth. We've also launched a number of new products in that time. So we're becoming more of a bank to more people, which is great. But definitely the demand was there. And it's been frankly hard to keep up at sometimes. I was very lucky in that I could get my entire bank staff working at home safely in about 10 days. I know not all companies were able to do that. Call center infrastructure was hard to move. So being able to service customers when they really needed us, people that needed loan deferrals and things like that, that was an unexpected demand. And we were lucky that we were able to scale with the cloud-based infrastructure to get there at a time that's, incredibly trying for so many people, obviously.
Right. And that demand is continues. I mean, things
going strong. Yeah, I mean, it peaked a little bit kind of spring of last year, but we're still seeing significant demand. And any pure digital player, I think, will tell you the same thing. Any player, I think, will tell you that they're seeing extra load and demand. So not just volume, but I think expectations of what can be done online. And I'm guessing a lot of branch-based processes had to change pretty quickly. If you had branches, we were lucky. We were built, as I said, digital from the get-go. So we assumed that no one had the ability to walk in and hand you something or have someone explain something like an advisor. So we had to build all of our technology to be really simple and easy to use, and all of our processes to work remotely. And so those things could all scale. They took some hand-holding and effort, but those things could all scale. So I think we had less pain, which is part of why we've seen such great growth in the last 15 months and even before that.
Okay. And Nick, your core business pretty much depends on a dynamic, vibrant global economy, and that global economy is effectively shut for big parts of the last 12 months or so, remains somewhat shut. What's it been like for you? It must have been tough.
Yeah, and that was scary at the beginning of COVID for everyone, digital company or not. No one knew what was going to happen, and as you imply, right, cross-border payments, are they going to slow down? There's certainly less travel. The World Bank had estimated that remittances were going to dramatically drop, which raised a whole host of public policy concerns that there'd be less money flowing to lower income countries. For us, fortunately, we've seen continued growth, and I think of how I bank here in the States. When I click on send money internationally, my bank, and it's a big bank in the US, tells me to come into one of their branches and fill out some paperwork. And so that digitization that accelerated under COVID, I don't know that was as evident at the very beginning of it. And so now coming out of COVID, it is really exciting for the things Dan chatted about, that we've perhaps accelerated those trends several years in the process, and makes businesses like us, even as our growth has continued throughout COVID, coming out of this, as international travel and cross-border payments continue to grow at a significant rate, has me really excited about the future of our company, especially as we continue to partner with banks and businesses who are integrating our platform onto their own.
Do you see the legacy banks waking up to what you guys have seen for years? And I'm just curious about what that means for the competitive advantage that you had. Why don't you start with that question, Nick? Do you see the established financial services companies sort of trying to catch up in real time now?
I'm optimistic that they will, for sure. Hopefully during this discussion, we'll talk about things like open banking and access to the payment rails, and that's where maybe some of the political positions come into play. It's unclear who's supportive of what, but I remain optimistic that in the long term, this is where we're heading, and companies like ours, innovative financial technology players, are going to be viewed as partners, not competitors in the market. And a lot of those legacy institutions will see this as an opportunity, not a threat. So that is happening. That has been happening, perhaps a little more slowly in Canada, but I'm very optimistic that will change and those partnerships will continue. And clearly their own products at the legacy institutions, they've put a heavy focus on innovation and technology, and I think those partnerships will follow.
And Dan, what are you seeing in Canada, there in Toronto? I mean, you're competing against a pretty well-established oligopoly. Talks about itself as a technology, or they talk about themselves as technology companies. I personally haven't seen a lot of evidence that they're really a technology company. But I suppose they spend a lot of money on technology. What do you see? Are they becoming a more aggressive competitor in this space now?
Well, I mean, before I joined EQ, I spent quite a few years at Bank of Montreal. My first job was actually writing code on a mainframe that launched 2 weeks before I was born. So they've been in the technology business for a long time, and they very much are technology companies, I would say. My guess, from a slightly outsider's perspective now is, I remember my experience there was all about, the mix of channels, right? You have all these different, touch points, and what's the right thing to do where. So where does this conversation happen? Which things do we sell online versus in branch? And I suspect that what's happening is the things that were thought to be true about that channel mix have probably been pretty disrupted in the last 15 months. And so my guess is the adapting is happening on that front, and I do think that they are big ships that are maybe a little bit hard to turn, but once they get turned, it's an awful big ship. So, we know they're working on it. We know there's lots of smart people there. I still have friends that I talk to once in a while and find out what's going on a little bit. So, no, we know they're working on it, and it's a different game, right? It's maybe less fast, but definitely, lots of volume. But to the point Nick made, I mean, at EQ Bank, we had the possibility, I would say, of looking at partnerships versus trying to do everything ourselves. That's been our model from day one. I'm not probably going to go build an international remittance play better than that core Wise product. And so we just started there. So it started with us looking at it. Our CEO and head of product flew to London, actually had a chat with then TransferWise folks, said, yep, these are like-minded people. And we did the integration in a matter of months. And, even to this pandemic point more broadly, if we think about this, sending money internationally, I've got lots of members of my team with family members in India, and some of them are sending money back to family there for whatever they might need. And that's one of the use cases we did. In fact, when we showed this off to the entire company, we did a company town hall, so about 1,000 people packed in a room back in the days when you could pack 1,000 people in the room, and actually had one of my directors stand on stage and live sent money to his account in India, and watch it happen in seconds. And so, now that's being put into production and practice by, real people sending real money for real reasons. A lot of which are very scary for them and their families, right? But the fact that they can do that really easily is, I think, giving them some comfort. So all to say, we've always been in the model of let's pick the best sort of mosaic of things that make sense to us and our customers and partner that way and build the things we need to. And so we're pretty happy to have partners like Wise.
All right. Let's get to a discussion about what's going on with regulation in Canada. And Nick, I'm just going to start with you. There's a section in the latest Canadian budget talking about something of the retail payments oversight framework. That came in around page 310, 311. I'll admit I didn't get that far into that budget on budget day, and haven't really got back there since. Nor have I seen a lot of coverage of that. Give us an update, maybe even to the minute if you can. I don't know. There's lots going on out there. What's going on? What does that mean? What does that mean for WISE and the fintechs in general, I guess, from your perspective?
Sure. I'm so optimistic about the ability of Canada to go from being a laggard to a leader internationally when it comes to payments modernization. And, we often, I think, get lost thinking of payments modernization as being real-time rails, but there's so much more to it. It's not just the RTR system that launches next year. It's also this new payments charter that you've asked about. It's then subsequently expanding access to the payment system, and finally open banking. And all of these things to continue, it can't just be an esoteric industry effort. I think there needs to be a little bit more of political will and a sense of urgency. And I do think we as an industry, and not just WISE, EQ Bank, but those listening and those participating in this panel can help raise the profile. So retail payments is a pretty good example. For us in Canada, the rules are pretty light for payment service providers. We're heavily regulated around the world. We apply those same standards globally, so that there certainly is faith in us by our customers and bank partners. But this new retail payments framework, which will require registration with the Bank of Canada, and then ultimately they'll become our supervisor. I think that helps build trust and lets consumers know that it's safe to participate in the payments ecosystem. It's ultimately a win for Canada. But we hope this gets followed up after this with expanded access to the payment system. So there's been consultations in years past about amendments to the Canadian Payments Act. This would take Payments Canada membership, expand it to a limited class of members like WISE, allowing us to originate payments ourselves, originate, clear, and settle instead of relying on a bank partner. That ultimately will lead to lower costs, significantly lower costs, faster speeds, more transparency over the payment status. That's what payments modernization looks like. So this payments charter that is included in the budget will hopefully get through before summer break wraps in about a month. Become law. That kicks off that process. That's part of payments modernization. It's happening. We have to keep it going.
Well, Dan, I'm going to ask you a question related to open banking in a second, but just to pick up on that last point, Nick, I wanted to get a sense from you about timing. I mean, it's one thing to put something in the budget, even something else, and even something to passing legislation in Ottawa. But I noticed in the budget there's language around negotiating with the provinces, etc. I mean, you're in DC, but I'm sure you got a sense of the way the political system works. That's usually a kiss of death for anything when it comes to trying to loop the provinces in and try to get some sort of agreement across the country. What are your impressions there? Do you sense that there's motivation across the political spectrum, across the jurisdictional spectrum, if I can put it that way, to get behind this, or do you worry about this initiative getting bogged down again, as so many other previous initiatives have gotten bogged down just by the nature of Canada's federal structure?
Sure. So it used to be called RPUF, Retail Payments Oversight Framework, now is called Retail Payments Activities Act, is in the Budgetary Implementation Act that is moving through the House of Commons right now. Hopefully, fingers crossed, seems likely to achieve passage. That first part enables the registration and supervision for companies like us. It's the phase 2 part that could get bogged down in some of those discussions. And I think that's what that section was alluding to, and that's called market conduct rules. So if you're using WISE, you submit a transfer, what is the receipt you see afterwards that says how much was sent from one place to another? Those are the types of things that are going to require heavy discussions with the provinces. I really don't know how that's going to turn out, but finance is calling that phase 2. Phase 1, that is the registration and then eventual oversight. That seems like that part, fingers crossed, should be okay.
So you planning to visit all the provincial capitals once the border opens? Once you can get back in there, you'll be doing a cross Canada tour, I bet, by the time this is over.
Well, I do like travel, so for that reason alone, maybe the answer is yes.
Thanks for that.
Remember travel?
Yeah, for sure. Dan, the big one for probably a lot of people watching us right now, and certainly something I've been asking people in your business in the fintech space for 3 or 4 years. I've been coming around to the open banking question. I mean, it seems that there's been sort of a consensus somewhere that this is a good thing for us to do, yet nothing really changes. What's the latest? I mean, obviously it has some implications for your business. So what can you tell us about what's going on that front?
Yeah, I mean, I don't know that I have the latest. I think at this point, it's from what I understand, the advisory committee made up of some very sharp people have delivered their report to the minister, and it's with the minister. So that is a black box that I can't see into. It does feel like there's some enthusiasm around this. It did feel like it stalled. To be honest, this time last year, it didn't feel like it was moving much. Obviously the government had bigger things to worry about at the time. But the consultations that happened last year, another round of consultations that have gone on this year, and I get the sense of the conversations that continue are promising. So I think you're right. I think the general consensus is this seems to be a good thing to do. I think there are a lot of public policy objectives that it could help support. I think the how is a bit of the tricky part, and the who a little bit. So, you mentioned some of the Fed Prov issues that have come up before. I do think there's a model like something like a Payments Canada where you can set rules that kind of work for the country regardless of where the institutions are housed. But it is making sure that we do this right. I mean, customers don't know the difference. And when I say customers, Canadians just trying to get a better handle on their finances aren't thinking about the difference between this credit union, which is provincially regulated, and this bank, which is federally regulated, and this brokerage, which is something else. That has to be transparent to the customer. So all of that has to be settled, and these are well known. These are well-known discussion points. So I think everyone is in agreement that we've got to go with this the right way. We might have some disagreements about what that looks like, but we do see this as an absolutely key part of called the digital banking infrastructure. Almost it has to be set up across the country. So payments modernization was always kind of described as that sort of infrastructure move. I see open banking as the same thing, and to some degree digital identity I would see. So when we put out our open banking response to the Department of Finance, we had this Venn diagram where these three things overlapped, and digital identity is in there, but there's no real speaking of Fed Prov issues, there's no real kind of concerted, consolidated, here's the federal plan for this. So while I'd like to see all that in place, it doesn't feel like it is. So we'll park that for a whole other session. I'm guessing there's 5 other sessions just on that at the summit. And I'm a little out of my depth. I know Johnny just spoke like a little while ago, so definitely out of my depth. But yeah, we see open banking as an absolutely key cornerstone for how the digital banking infrastructure and finance infrastructure of the country goes forward.
Perhaps a way to sort of get about some of that awareness that Nick was talking about to the extent that can apply some pressure to move this forward. Dan, talk about what EQ Bank would do or would be if some sort of open banking regime was in place. I mean, what would you guys do with that sort of regulatory certainty, that sort of regulatory structure?
Well, I mean, there's 2 parts to this. I mean, in theory, one of the things we've seen it used for, it depends on the jurisdiction. It's a bit different where you look around the world, what sort of the driving force behind open banking was. In Australia, it's very much a consumer data right. But in the UK, it was a pro-competitive move. And we do think that some of that would manifest. The example I gave when I was speaking at the Senate Banking Subcommittee about this is, my dad's a farmer, small business owner. Maybe somebody wants to build an app that actually helps farmers figure out what the best banking package is for them. Because for him, he lives 20 minutes from a bank branch. And that's, he thinks, his only option, right? It wouldn't occur to him that there might be some credit union in Saskatchewan that might actually have the best offering for him. If he analyzed his cash flow or his needs or his budgets. So to be clear, not that my dad's doing this, my mom might help him, but that was the example I've used in the past of, you could make it easier to find a solution that fits you versus I'm going to go to who I know and hope that they've got something that works for me, because they're going to tell you they have something that works for you, whether they do or not, right? So there's a bunch of things that could come from this, and we feel good about our product offerings and feel like a more level competitive playing field could help with that. So that's kind of, we can see any number of situations like that coming up. Frankly, open banking is like a utility, right? So we don't really know what all the use cases are. I've used this line many times, but if you go to the street and ask someone, do you care about alternating current? They'll say, no, I don't at all. If you say, do you want to be able to plug in your fridge and keep your food cold and charge your iPhone and watch TV? They say, yeah, of course, right? So they want the utility, even if they don't think about the utility. I think the use cases that come from this, we can't even really think of what they are now. So I know that I want the utility. And I'll be a player that, puts data into that as well. For a lot of people, I'm a secondary bank. We know that, right? So we have a responsibility to make it easy to, help customers see their entire financial picture. We feel strongly about, the right of Canadians to do that. We believe in a world where you won't have everything with one financial institution. You'll have a collection of things that make sense to you. And open banking, I think, will make that a more possible world. So, consumers get fairer pricing maybe or better products. And we want to be part of that. We'll stand behind our products and our pricing to be able to do that. And hopefully open banking helps.
Nick, you called Canada a laggard a little earlier in our conversation. How far behind is Canada, would you say? And then this is your opportunity to weigh in on the open banking discussion. I'm sure you obviously surveyed what's going on in other places, but just give us some perspective on that. I mean, how far behind is Canada, and then what's it costing us?
Yeah, well, first, Dan's analogy to an alternating current, I love that, and that's right. And earlier when I talked about getting the political will involved, I think it's part of using those kind of examples and explaining to people how this impacts their day-to-day financial lives. When we're talking about integrating APIs between financial institutions, people don't know what that means, but they do understand that when they go to add money to a Wise and they're authenticating their account, they don't quite understand that there's maybe a third party using screen scraping behind it. Open banking is already here. It's just the way it's happening now. It could be a lot safer and secure for consumers. I think of if you have a personal financial dashboard, like Mint, where you're using robo-investors, you're using open banking. And so it's the way that's in use could be improved. So the UK, as Dan referenced, under their competition mandate, required the biggest banks to allow open banking to move forward. And so Wise, for example, has integrated directly with them. And for a while, we were actually the largest payments initiator in the UK. Something like 70% of open banking payments came through us. So, you're talking there not just about authenticating accounts, right? Linking financial bank to bank to fintech, whatever it is. You're also talking about a new payment method in the process. And ultimately, using the father example, we're talking about people with student debt. Maybe they can have better opportunities available to them. Consolidating debt. Now people aren't just signing up for some advertisement they saw on TV. Maybe they're getting a better sense of what is their best option. That's the kind of stuff that can happen. And so, being a laggard, maybe the idea that screen scraping is all that exists in Canada is a good example. In the U.S., where the regulatory apparatus is even further behind, Canada has started the process in a way the U.S. hasn't, but there are partnerships that have taken off in the U.S. where it's often not screen scraping that's being used. It is a direct API integration between that third party and the fintech on one side, the third party and the bank on the other side. So open banking is moving in a different way that isn't yet happening in Canada. You saw Revolut, for example, who is a competitor of ours, also London-based. They recently left the market. Things like that should raise some eyeballs. But ultimately, I am optimistic. There is government initiatives. We just have to keep the pressure on to make sure they happen. That's how we change from being a laggard to a leader.
You mentioned how the U.S. is even farther behind. Does that suggest that this is an opportunity for Canada? Is this a chance to secure something of a comparative advantage just through the regulatory structure, or is it not as simple as that?
I do think so, for sure. Going to launch RTR before the Fed launches FedNow the subsequent year. Talking about when that I framed payments modernization at the beginning being those four things. Also, a payments charter, expanded access to the payment system, and open banking. The U.S. is following on that first one, RTR, but there's no government actions coming on those others. There's some stuff on open banking, but it's pretty minimal in comparison to what Canada's doing. So that's where there's a chance to launch here. And I know it could make the Canadian market pretty appealing to foreign direct investment from financial players who see a forward-leaning government, an innovative payment system that they can allow increased competition, that kind of thing. So big opportunity here.
Okay. Can I just jump in there too? Actually, I've heard Senator Dickinson say a number of times open banking, and a number of times that we understand that this is actually the kind of thing you do to preserve that stability message that we've talked. Stability message that's been said so many times around the banking system in Canada, right? Where I think the objection, the concern about open banking is it will kind of take that away and reduce the safety and security. I think open banking is actually how we preserve some of that.
Have we lost Dan? Is it just you and me, Nick?
Looks like it. I got kicked off earlier and was able to jump right back on those.
Well, I'm sure you'll be back in a second. I was going to save some questions to the end, but there's one that's popped up that is relevant to what we're talking about. And I've started to ask Nick a question, Dan, so I'll probably finish that, and then we can come back to you, and you can collect your thoughts and pick up where you left off. And you can answer this question too, since it's directed to both of you. I'm just jumping ahead and going to squeeze in an audience question now, and that's about the real-time rail. This audience member wants to know if you guys think that companies like yours will actually have direct access to the real-time rails in 5 years. So Nick, why don't you take that? This is really a way of saying how good you feel about sort of the regulatory direction in Canada, but do you think you're going to have access to real-time rails in Canada in 5 years' time?
I sure hope so. That's certainly the expectation. There was a sequential nature to that payments charter, and then ideally followed by expanded access to the payment system. This is the kind of conversation that's happening around the world. Even BIS, their Financial Stability Board, the central bank for central banks, they've put out a report on the future of cross-border payments, making it more accessible and affordable for end users. And one of their core recommendations, the building blocks of this report, was to expand access to the payments system. And the reasons, and had these discussions all over the world, it's pretty clear. Consumers ultimately benefit from lower costs and better services. The ecosystem benefits from more innovation and competition. And the financial stability that comes from the diversification of risks. And I can even go just a bit deeper on those, because in 2018, Wise, then TransferWise, actually became the first payments company to gain direct access to the payment system in the UK. A number of countries have since followed suit. We're connected in Europe. The entire European Union is following soon. Singapore, Australia could as well. Japan and Canada, clearly wants to add to that list with the past consultations. So, you look at the lower cost and better services. Our UK customers pay a fee that's significantly less than our Canadian customers. Why? Access to the payment system. Think of the expanded cost of having that middleman in between when we're originating payments. It goes from us to our bank partner, who charges a lot, to the payment system. If we're able to connect directly, we're going to pass those costs down to customers, as we've done elsewhere. Innovation and competition. Dan, who's an operational expert in a way I'm not, can probably tell you about things like India and the payment system they built. And Canada's trying to learn from all these systems around the world that allow innovation to happen on top of the payments platform. We can't do that if we're reliant on a bank in between. And also for payment players, there's a risk of de-risking as well, where if money services businesses are viewed as a risk, they'll just offload all of them, right? It's a way to lower risk. This eliminates that. And finally, the financial stability that comes from diversification of risks. In the U.S., more than 50% of payments flow through two of the biggest banks. So there's some risks to single points of failure in the payment system versus diversifying like they have in the UK, where now there's a lot of participants. It's been pretty successful. And also now, the central bank and the payments operators, Payments Canada, will have direct oversight of our operations and payments as well. So all in all, clear benefits from expanded payments access. I'm optimistic we'll have it. It's lower cost for consumers, more competition, innovation, and more diversification of risks, which means more financial stability.
Okay, Dan, now I'm going to give you the floor, but I just can't resist saying before we begin that the journalist and former journalist managed to stay on, and the tech guy, the coder, somehow got booted off the screen. But
sorry, everyone.
There you are.
Of course, it's the CIO who has the most technical problems, right?
We were teasing you, and you just you weren't responding to my joke. I felt bad about it, but
I've already raised a support ticket.
You're in the process of vanishing. Dan, the real-time rail question, how do you feel about getting direct access within 5 years? And then please pick up where you left off when you had that tech failure.
Yeah, which one? I think for me, it's even, I have technically the same banking license as one of the big national bank, big six banks. But I haven't even until recently had the same right to access the payment systems, right? And so with the emergence of RTR, I think we're even still, frankly, in the process of figuring out what I can access directly, right? So, and what the operational needs are for that, and then what role I can provide, if any, in sort of giving more access to the systems. So it does become this balance of, the safety and stability of those systems, but access to them. And I can tell you from all the years in the early days of defining what the RTR and the rest of modernization was meant to do, it was meant to give more access and actually provide more, choices to Canadians and exactly how to do that. So whether that's through a company like Nix or numerous others, that was one of the fundamental principles behind modernization. So I firmly believe Payments Canada will get it there. It's a tough slog. There's so many moving pieces. And, I know it feels frustrating that it's taken as long as it has. But I can tell you that I'm really hoping it'll be worth it in the end. And for myself, as a smaller bank, we think there'll be real benefit to us too. So I'm very confident we'll get there. But it's a complicated journey. Okay.
Another question that has just popped up that I think is relevant to this strain of questioning, and get you both to think about it. It's kind of philosophical in a way, or just a way to frame where the industry might be headed. So you both expressed confidence in that in the movement toward having direct access to real-time rails. We might be getting closer to something around open banking. You get all this in place. And how are the fintechs going to approach the business environment in that instance? Do you see companies choosing to become financial institutions, I suppose, somewhat like EQ Bank, Dan, or are they likely to stick to doing what they do best and doing partnerships? I suppose, Nick, not unlike what Wise has done with EQ Bank and others. What do you guys think the near future might hold, assuming we get some sort of regulatory certainty? Dan, maybe you go first.
Sure, I can give sort of the bank perspective on this. I mean, anyone who has applied for a banking license will probably not ever want to do it again. So fintechs may not want to go down that path of actually becoming banks, but they might, right? I think if you're large enough, maybe it makes sense. But my sense is, you might not want to, but you might not want to, or might not need to, I should say. I think when we think of banking, we think of a lot of things, right? And while we're a digital bank and fairly new, we do pretty old school banking. So we take deposits and we pay a fair rate of interest, and we lend money to those who need credit, and we charge interest on that, and we make money on the spread. We don't have crazy complicated products. We're not in a million different markets. We're not trying to do too many things. We are kind of an old-fashioned boring bank in that way. And so that is the kind of stuff that is hard to do. There's the capital requirements and the regulatory requirements around that aren't lightweight. But the payment space, we tend to think of this as a space that banks are in. That's, I think, a place where fintechs and paytechs are looking at to Nick's earlier point, if you drew the value chain for payments on a whiteboard, you'd need a second whiteboard, which means there are a lot of hands sort of taking bits out of that. And I think, my general view is that there's lots of disruption possible in that. And so I suspect that is where you'll see probably a bit more movement than on fintechs wanting to become banks, but that might be my own biased and possibly defensive view. So if anyone wants to argue with me, I'm over here. I can tell you what it takes to launch one. Wouldn't recommend it unless you've got really strong coffee.
Excellent. Nick, what do you think? How do you think the near future might unfold?
Yeah, well, certainly some in our space have gone the direction of becoming super apps. We've doubled down on what we do best. We've built international payments infrastructure, right? That means integrating directly where possible to those payment systems in countries around the world. That's very difficult to do. That's what we've done best. We know our customers want us to help them manage and spend their money internationally. And ultimately we try to listen to what they want. We even have wish lists for different routes or products, and we certainly keep track. You think of what a bank does, maybe it's three core things. To Dan's point, our payments, that's what we do, but also lending and deposits. Well, we don't lend. And even though we have stored funds on our accounts, that's typically used for managing, moving, spending that money internationally. It's a bit different than deposits. And so we are not a bank. We if countries are forward leaning and they think about modern payments oversight regimes, then we don't need to become one. And that's why things like the Payments Charter in Canada are so important. In the US, we're having a different discussion where, they haven't really gotten to that point. There had been a Payments Charter proposed, but it's subject to heavy litigation. There's no path for a company like us to gain direct access to the payment rails. Our federal oversight is light because we're state regulated in the US. And so, I think countries that recognize modern unbundling that's happened within financial services requires modern financial regulatory regimes. That enables us to continue being a payments company because that's what we do best, help people move their money internationally.
Nick, how does Wise think about the fairly rapid shift to crypto? I don't no agenda that question. I'm just curious. How does it fit in your plans? I suppose there's a world in which it could be a competitor, I guess, but there's also a world in which you sort of add it to one of your services. So how are you guys thinking about that?
Yeah, I've been thinking about this a bit, less for the business reasons of Wise and just more out of curiosity as countries are considering central bank digital currencies and stable coins are popping up. And what does all this mean? For us, our mission is money without borders, moving money instantly, conveniently, transparently, and eventually free. So could using crypto, stable coins, central bank digital currencies enable us to do that? From what I see, you still need that same infrastructure that we've built relying on fiat currencies. So the use case for us on how that enables us to move money cheaper, faster, more conveniently, more transparently is not yet clear. So it's certainly something we're watching, but we're focused on moving money as best we can, and I haven't yet seen the use case for that to improve upon what we're already doing based on the infrastructure we've built.
Okay, and Dan, I was going to throw that question to you quickly. I mean, what does an old boring fintech like you make of the crypto craze?
Yeah, I mean, listen. What we think of as money. I mean, our CEO likes to go back and read about the Knights Templar and banks in Italy and stuff like this. And so, we do kind of spend a lot of time waxing philosophical sometimes about what money really is. And so not to say it can't change, but, right now I think it's not an area that we're focusing on in particular. We watch it, but I think when the Bank of Canada and OSFI kind of tell us, yeah, maybe this is something that we should all be talking about, then we'll probably spend a little more time. But right now, a central bank backed digital currency, I think has a ton of appeal. I don't know if it's a focus right now in Ottawa, but that could be where money goes. So we tend to think of the customers and their needs and they need to get a store of value from here to here. What's the best way to do that and the safest way to do that? And so we're always looking at that. But I think that safe store of value and what we as a bank, what role we play in the system which is in a lot of cases around stability and security and soundness. So yeah, we'll always come at everything from that standpoint.
All right. I'm going to stick with some of the questions from the audience. They're better than mine, frankly. And here's one I detect perhaps just trying to get at or introduce a bit of skepticism, Nick and Dan, about your relative optimism about where the regulatory push is headed. This question mentions your thoughts, Nick, specifically on the Fed Prov risks. This person just wants to know what are the risks? You both feel that things are going in the right direction, but what could go wrong? When you sit down to sort of map out your lobbying strategies or the things you're going to need to do to get these rules over the finish line, and what are you worried about? What are the red flags out there that could send this off course? Why don't you go first, Nick?
Sure. Earlier we talked about the new retail payments charter that's coming in. Phase 2 will be these market conduct rules. What do consumers see after they send money through us or a competitor? There's an opportunity there to bring more transparency to the payments space. When you send money internationally, that example Dan offered of sending money to India earlier, people often don't realize, because they'll see advertisements of free or low cost, they're getting ripped off when they send money abroad. I'm hopeful that the federal government, the provinces, and players in this space can come together and agree on requiring more transparent pricing in this space around cross-border payments. And the reason that matters, prices are artificially high in the market. They shouldn't be. If there was transparent pricing, people understood the upfront fees plus the FX charge that's used together equals whatever it is, sometimes 5, 6, 7%. They would then start shopping around more. That would induce more competition and drive down costs. And the World Bank, the UN, they're laser focused on this as well. They put out a big remittance report last year that recommended more transparent pricing in the marketplace as a way to help lower costs. If it costs 6.4% on average to send money for migrant workers to send money to other countries, that's what the World Bank estimates. Their goal is to get that to 3% by 2030. That's that cut it in half and then some, and that's a UN Sustainable Development Goal. I think Canada can help with that effort if in that phase 2 of the retail payments charter, there's transparent pricing that's required around market conduct rules. So that's where it really is key that there's some sort of agreement, whether in law between the federal government and the provinces, or in some sort of industry standards, whatever it is. It's really important that they come together. We not get stuck in any of these jurisdictional fights. So that's a really big issue where this could come into play later on. What consumers, that includes businesses as well, see when they send money abroad. I'm hopeful that can get solved in phase 2 of the retail payments framework.
Okay, and Dan, what are you worried about? What could go wrong?
I'm probably most worried about inertia, frankly. There's active resistance and inactive resistance, I think, to change. And I think, if you look at something like payments modernization going way back, I mean, this isn't something that 30 odd million Canadians are screaming about every day. This is kind of just something that's in the background of their lives and they don't think about it that much. But, you had well-intentioned people in Ottawa said we need to do something about this. We had small business owners certainly kind of, pushing for it. So there were lots of powers out there trying to assemble voices and find a way to move it forward. And, an independent board, I think, helped with that. But there are, large institutions that have profit pools that they don't necessarily, want, but they might not want the same change, or they might not want it as much as some of the other players do. And so I think that inertia comes in, whether it's, in this case, in the payment space or open banking, can come up anywhere. And I think that inertia has probably been one of the biggest challenges in getting things moved forward. So yeah, that's really what I think about. There are other challenges that kind of be figured out, and those feel like engineering problems, not physics problems. But the inertia one it's a tough one. It takes a big stick and a big lever to move some of these things when they don't want to be moved, is my opinion. So so we continue to be, I think, a voice that's a bit different than that, and very actively advocating for change in this space and trying to drive everything forward while still playing our part as a bank.
Okay, thanks for that. We have barely 5 minutes left. I'm told that they're going to basically shut us down exactly at 1 o'clock. I argued for more flexibility, but it doesn't work that way. So I want to give each of you a chance to wrap up, and then if we're left with 30 seconds, we'll figure out a way to fill it. But Nick, go ahead. You've got a couple of minutes to give some closing thoughts.
Yeah, well, the short answer here is, check out EQ Bank and partner with Wise. We'd love to integrate with businesses and banks, but more seriously, I'm really excited and optimistic about the future of Canadian payments. These things are moving. There's a lot of attention around them. That's not the case everywhere around the world. We have an opportunity here. I said earlier, to go from a laggard to a leader. I really do believe that. The budget included the retail payments charter that initially it was rumored was not included. And that changed perhaps in the final weeks before it was released. That may have been in part due to some political pressure that raised the profile and showed why this is good public policy that needs to be pursued. We need to keep doing that with these other initiatives that are still outstanding. See the ones that are on the way, through all the way, but also amendments to the Canadian Payments Act, which has expanded access to the payment system, open banking, making sure that RTR is as innovative and forward-leaning as possible. Those are the kind of things that we need to do everything we can to raise the profile, tell the story, get some grassroots support. Not just a bunch of payments people calling for it, but the broader business community and the general public as well. That's how we ensure that payments modernization continues.
All right, and Dan, a couple of minutes. What a couple of your final thoughts?
I'd like to just jump on what Nick just said. I mean, they're really keeping, Canadians in mind, small business owners, especially now. Think about how different their world might have been if payments modernization, if the real-time rail is in place and open banking was available to help get a better grip on finances. It shows why pace on these things matters. These things are hard, and change is hard at a national level. And there are lots of things that will sort of bog us down. So it's really, really important to kind of remember who's at the other end of this, right? This isn't a policy discussion. In the end, this isn't just academic industry discussion. So I implore everyone, and this is how I've really stayed engaged with this over the years, of a lot of slogging. You have to remember that person at the end that you're actually trying to do this for. So think about, the Canadians broadly, or picture someone but I look at the people, the 182 people on this session, all the people attending the summit. I think all of you are in an incredible position to be able to affect this in one way or the other. And so I would just implore everyone to, if not us, then who? And if not now, then when, right? We have to be the people to drive this forward on behalf of all the other people who are just trying to keep things afloat and understand what their finances look like and pay for things at the grocery line, right? So that's my sort of social good pitch for the day, I guess. It's my rallying cry. But those are my final thoughts. That the people listening to this, you have an incredible ability to affect how these things get done and do the right thing for the country.
All right. I don't know exactly how this works. We're in a new world, but we're pretty close to time. I see a note here telling us to mute our mics, and then I assume something else will happen. But just before we run out of time or the screen goes red or whatever happens, I just want to thank everybody for watching, and Nick and Dan, thanks for doing this, and Payments Canada, everybody involved, thanks for inviting me to host. I learned a lot, and hope it was good for me. I hope it was good for everyone else. So thanks Nick, Dan, thanks everybody for watching.
Thank you. Thanks everyone.
Thanks. See y'all.